Good morning and happy Friday. Jordan Keck, your complicated deal guy here with your weekly market update. Kicking off, wanting to look at interest rates, finally coming down a little bit this week from 6.83% last week to 6.77% this week. And as a reminder, that is an average for lenders across the country, according to Mortgage News Daily, for the top tier purchase scenarios. So if you've got a $600,000 purchase price, 25% down payment, 800 credit score purchase, owner occupied, that's going to be the average rate that you're seeing across the country from lenders. You can buy down to get lower. FHA and VA, USDA are going to have different rates. And of course, every variation in that scenario will change it. So it's not a rate quote so much as this is an indication of where rates are moving from one week to the next. As far as a weekly mortgage tip, wanting to talk about having licenses available in other states. So I'm finding more and more people don't realize that beyond just Oregon, I'm licensed in Washington, Idaho, California, Arizona, Texas, Montana, and Hawaii. So in Oregon, it's a very interesting rule where if somebody lives in Oregon now, but is moving to another state, the loan officer has to be licensed in both states. This is very unique. Most states do not require you to have a license from where somebody's moving from, but Oregon does. So if you've got sellers that are looking at moving out of state, their new loan officer may not know that. Unfortunately, that is a requirement. So happy to be able to take care of them. If you know that you've got clients that are moving out of state, happy to get them taken care of. So again, if I can help out in any of those states, let me know. Next up, we have the U.S. called off a massive attack that was scheduled for launching on Iran. Peace talks may be resuming here soon. We've got Trump said negotiations in Iran would be resuming this week, although Iran did deny the discussions. Iran did confirm that they have been in talks with Oman to open a temporary route through the Strait of Hormuz. And there have been there's still hundreds of ships that are stuck in the Persian Gulf after the Strait of Hormuz has been closed. A lot of those are storage for oil that just hasn't been able to go anywhere. But because of the talks of the deal potentially being reached about a new route being opened, there was a big release in oil prices as a result. Next, we got the June JOLTS job openings report, showing job openings fell about 178,000 to 7.359 million, a little bit below estimates of 7.4. This is still fairly close and not a huge change, and the markets didn't have a big reaction to it. But the biggest contributor to job growth has been healthcare, but openings for that sector fell 147,000 for the month of June. Leisure and hospitality also shed 86,000. And then going into ADP's jobs report, they showed for July, 44,000 jobs created, below the 70,000 that was expected. The prior report was also revised a little bit lower by 3,000, and most of the job gains that came from this report came from healthcare, which points to more towards an aging boomer demographic than a stronger labor market. The World Cup was also estimated to account for about 180,000 jobs over the past few months, but those jobs were temporary, and this report alone saw about 11,000 of those jobs being shed, so we may continue to see that in the coming months. Mortgage applications were were unchanged for the week for both refinances and purchases. Year over year, though, purchases are now down 3% and refinances are down 9%. This is the first time we've seen a two negative year over year weeks in quite some time. And lastly, the BLS jobs report for July showed 23,000 job losses, well below the 80,000 gains that were expected. Payrolls for June and for June and May, the last 2 months were also revised lower by a combined 103,000 jobs. The household survey, which shows the unemployment rate, fell from 4.2 to 4.1%, but not because of a stronger job market. The household survey reported 87,000 jobs lost, but because 264,000 people left the labor force and are no longer being counted, the unemployment rate went down as a result. Since May, about 700,000 jobs net have been reported as lost in the household survey, but because they show 1 million people no longer being counted in the labor force, it led to a decrease in the unemployment rate by 0.2% since May. If you don't take those people out of the equation, though, some of them might just be on benefits for too long, or they show that they're not looking anymore. You can look at the U6 unemployment rate, which takes all those people into account, and it can be a better indication of a true employment rate or unemployment rate, and that has remained stable at about 7.9%. As always, hopefully this is helpful. Have a fantastic weekend. We'll see you next time. Take care.